And at the same time, we may already have slipped into recession in the past month or two because they just revised down the jobs by almost 1 million. If we're going to have that deflationary bear market and recession, we will need to see labour market deterioration. We'll continue to see weaker and weaker jobs reports until eventually we reach recessionary levels for the labour market. Okay. We've got massive misses in practically every metric for employment. On top of this, more recently, we've got the Fed losing 20% of the data that it's supposed to be making the rate decisions on. It also suggests to you there is some chicanery afoot here pertaining to not only the inflation data, but also to the jobs data. And at the same time, we may already have slipped into recession in the past month or two because they just revised down the jobs by almost 1 million. It's the largest cut in history. And they are basing this, remember, on 2 pieces of manipulated data. The CPI, which is clearly a psyop, as I've shown you already, and the labour market, which again, there seems to be some chicanery afoot there, despite the persistent overall trend of labour market deterioration. Inflation is indeed well under control despite this counter-trend rally, and the labour market is significantly worse than they have been letting on for a long time. So the reality is we are actually cutting into a recession, which is bearish historically, okay? Instead, what I am here to tell you is, whilst the rest of the market is looking for rate cuts into a soft landing, I am here to tell you these are much more likely rate cuts into a slowdown, and thus will actually be bearish despite the majority of market participants looking for these cuts to be bullish.